Welcome back to Primary Source China Investment. This is show S3, and this week was filled with a ton of macro policy and MOU signings and potential agreements. So we wanted to get into it, but we only have about 10 minutes, so we're going to stick to the highlights. And a lot of policy things get pretty boring after too long. So the first rule of stimulus is we talk a lot about stimulus, and there's been an ongoing debate whether Beijing would, add stimulus to the macro policy, and there was an announcement this week about a 19 bullet point package worth more than 1 trillion renminbi, and some of that was announced previously, but it was in a few tranches. So the first tranche was a 300 billion in policy that would implement financial tools that is expected to create synergies, whatever that means. Two, they also announced 500 billion in special bond ceiling limits relative to infrastructure. And then third was the state-supported power generation. That was another 200 billion, another 10 billion in renminbi subsidies to the agricultural sector. And then finally, separate to this, but maybe included in the trillion, a little unclear, was another 200 billion for real estate. And they will offer special loans to make sure that stalled housing projects are delivered to buyers. So, anybody familiar with the show or anybody familiar with the China economy knows property is a big one. So, peng.guo, what do we think about all of these, multiple things?
I think firstly, it depends from what kind of the perspective. So from the country's level, that's definitely give the positive signal. So that's really help people to increase the confidence, a little bit change their miserable expectations. Right now, is I think that's the most important for all those activities. So it's still showing the country take actions, they do something, they hope for they can create some result, and they try to use this positive signal plus the multiply effect downstream financial institutes, so they can do some things better. From a micro perspective, people received some tax deduction and they get some better policy, and even the social security fund, they reduce the charge or they reduce the rent, whatever things they can do. But they won't be helping you too much, but they still show some good signal and make people feel better and increase the confidence to do the work.
Yeah, you mentioned this consumer confidence. It's a little bit out of sequence here, but consumer confidence hit a low in April and is sort of bounced back a little bit. Consumer confidence is way off its sort of average over the last couple of years, but it did bounce off the bottom. So, maybe some of this policy is related to that, because people are waiting for Beijing to do something, right? If you're the average person,
yeah, that's the expectations. You have to do the right things at the right time. But I think that's good.
One of the things that you mentioned about downstream, I want to talk about that a little bit, because it does seem like no matter what, Beijing says go out and lend more, go to the banks, go out and lend more. And what the banks are finding that, cheap money, I can give you cheap money, manufacturer or retail guy or company, but the companies are not that confident. So they're not willing to take on additional debt. So you have an excess supply of loans, but you have sort of weak demand for loans.
Yeah, I think that is probably why the country to reduce the interest rate and increase the liquidity. It won't solve the problem, but it will remedy the short-term problem at least. So as long as the central government doing like this way, I'm pretty sure all the local government, they will take some actions to follow up. That is very important. Firstly, they show the direction. For example, like my father has some of the house, so those area the developers they get some policy. They also take really like the order to go back to finish your real estate project.
Right.
You take over the money, and that's negotiate what you need, what you can do. and also they get a lot of like the political motivate the people and a company or whatever. They participate in those kind of real estate things.
Of course, because the local government has an interest in making sure that these projects get finished.
Exactly. Yeah.
Yeah. One thing, if you don't follow China Beige Book on Twitter, absolutely go out and do that. They've been doing this a long time, and their point was, stimulus doesn't count when it's announced. Stimulus only counts when it's implemented. So there are a lot of these policies that have been announced already. For example, you mentioned that the local government going to follow the Beijing policy. But in actuality, a lot of the local governments haven't been able to put that money to work because there's a lack of demand.
Exactly.
Yeah. So it'll be interesting to follow. One thing I did want to talk about was the manufacturing PMI. So I was having a discussion earlier today with somebody that's tangentially invested in China, and this person was saying, is there a slowdown? Is there not a slowdown? I keep hearing about lockdowns. I don't know what that really means. And if you pull up the manufacturing PMI, we're going to put that up. It's actually been bouncing around, and that really follows this fits and starts with the economy. What's happening with the economy? It's starting up, shutting down in areas, again starting up and shutting down, and you see that in the manufacturing PMI.
Yeah, and I think a manufacturing PMI is really impacted by the global market. Recently, they are all talking about the lack of the order from the Western countries. Yeah, but the PMI, this is the number is still reflect, especially the trend. So as long as they can stream the entire supply chain, and also some of the manufacturer, some bad or difficult situations will push back for the government to change their policy. Government, they can change the policy overnight.
Yeah, that's the point. And there's a lot of things happening on that. Manufacturing is one piece, but the service economy is the other, right? You had this, I don't know, half announcement with PCAOB and the CSRC about these China-based U.S. listed companies. And it was, both sides, the CSRC and the PCAOB, both made announcements, and, the language didn't really match up. So people are cautiously optimistic, I will say, but the base case still is a lot of companies are going to delist. So that's on the service side. And also I read, the flights in and out of China, US is canceling China Airlines from flying to the US, and China is canceling some airlines flying from the US to China. So, all of this tit for tat stuff continues along.
That's true. I think still a good way is watch out the trend of the sector indices. So they will give you the best way to explain what the current market is.
Yeah, and I think that all goes back to, where are you going to invest your money? And I think if you're an allocator to China, you're a large institution, you're a pension, you're an endowment, you are allocating to China. And where are you allocating to China? It's, again, those large cap institutions that are closely aligned with Beijing during this period. Those tech funds jumped on Friday because of this PCAOB and the CSRC announcement, but to me, there's just way too much policy risk involved. It's just very difficult to
I agree.
That. Yeah,
I agree. So anything, any bonds or any up related to the policy stimulus, that should be get avoid. And that's more like the event-driven strategy. That never works. You will also see those funds lose the money.
Well, we're going to hear from all the event-driven fund managers saying, no, event-driven is a great strategy. So
yeah, I think it's still back to the fundamental demand and the supply. I think the most important thing is you probably need to choose the right time to get into the market. So that means you have to spend the resource to keep watching the China market.
Yeah, it's expensive. There was an article this week somebody sent me Allianz is going to try to join a joint venture with the wealth management in China. I said, it's a tough business. It's a highly competitive business. You need a lot of resources on the ground. You can ask JP Morgan. They've been there 20 years and only managed to raise 20 billion US dollar equivalent, which is tiny for a company that probably manages more than $1 trillion or $1.5 trillion. So
yeah, and also we can give our advice and suggestions.
yeah, we definitely have an opinion on that. So
yes.
All right, we're going to leave it there this week. Thanks for tuning in. We'll be back. Enjoy the remaining bits of the summer. Squeeze it all out.
Thank you.